What if I told you investors poured $82 million into one ETF in April 2026, even though that ETF had lost 26% year to date? Welcome to the strange world of XRP ETFs. XRP is the spot exchange-traded fund from Bitwise Investment Advisors. It launched on November 20th, 2025, and it trades on the New York Stock Exchange under the ticker symbol XRP. It is the first spot ETF built around Ripple's cryptocurrency, also called XRP. And money is pouring in. As of April 2026, the Bitwise XRP ETF has gathered around $315 million in assets. XRP spot ETFs as a group pulled in $82 million in April alone, the biggest month of 2026. This makes XRP one of the fastest-growing new crypto wrappers on the market. Here is how it works. The Bitwise XRP ETF holds actual XRP tokens, not futures, not derivatives, real XRP. The tokens are held by Coinbase Prime, which provides institutional-grade custody and insurance. When you buy a share of XRP the ETF, you are getting direct exposure to the spot price of the cryptocurrency, all from your regular brokerage account. Now here is what they don't tell you. Even with all that inflow, the fund is down 26% year-to-date in 2026. Money keeps flowing in while the price keeps falling. And while Bitwise was first to market with strong liquidity, its expense ratio is 0.34%. Franklin Templeton's competing XRP ETF charges just 0.19%. Bitwise is not the cheapest option. Why the divergence between flows and price? It comes down to two lessons every ETF investor should learn. First, ETF inflows do not equal price action. New money buying the ETF does push some demand into XRP, but in a global crypto market, ETF flows are a small fraction of total trading volume. Second, the crypto ETF space is now crowded. 8 or more issuers are fighting for the same investor, which means fees are heading down and first-mover advantage may not last forever. On performance, XRP the ETF is currently rated below average for the digital assets category. It returned negative 26% year-to-date through April 2026, about 3 percentage points worse than the average crypto fund. That said, since launch in late 2025, the fund has tracked the spot price of XRP closely, which is exactly what a spot ETF should do. So who is this fund for? It is built for investors who want XRP exposure inside a regular brokerage or retirement account without dealing with crypto wallets, exchanges, or seed phrases. It is for people who already believe in Ripple's payments thesis and want the simplest possible wrapper. It is not for income investors. It is not for capital preservation. It is volatile, and it will swing with the broader crypto market. Quick reality check. A spot crypto ETF makes XRP easier to buy, but it does not make XRP safer. The cryptocurrency itself is one of the most volatile assets you can own, and wrapping it in an ETF does not change that. If this breakdown helped you understand XRP the ETF, hit like and subscribe. And drop a comment with this. Are you buying XRP for the price upside, or are you avoiding it after the rough start to 2026? I read every comment.